Hey YouTube, Jason here with DayTradingFearless. Welcome back to my channel. If you're new, welcome. Make sure you guys like and subscribe. And if you have any questions, comments, leave them down below in the comments section, please. Okay, as always, let's jump right into it. So you guys know I'm a S&P E-mini future guy by heart. That's kind of my baby. So I've watched for the last now going on probably 14 years, every day of my life, and I still watch it every single day. But lately, I've been getting into a little more of the momentum stocks, kind of penny stocks, things like a Ross Cameron trades, things that are moving really good, where you can make a really good returns if you know what you're doing. So what this video is all about are looking for patterns if you trade these types of stocks. But what's really cool with this is you can also use these for day trading S&P E-mini futures or SPY or whatever you want. So quick rundown, here's my watch list, here's my order entry. This is a two-minute chart. Usually I'll have 1 day, 2 minute with regular trading hours in the dark gray and post out market in the blue or light gray. So this is a ETH extended trading hours. This is a 5 minute 1 day chart. Regular trading hours. This little kind of turquoise line on both charts is the open, known as red to green. That's where price open, right? So if price opens here, goes lower, we come up and we go from red to green. This is a daily chart just so I could kind of see what the patterns are, if there's room to run to the upside. And then of course my S&P E-mini futures. My level 2 over here, which I also have level 2 inside here. And then if I want to buy or sell at the market really quick. So let's jump right into it. These are patterns that I like to look at, okay? And I like to look at post-market because a lot of times, look at this, or pre-market. From the morning session early before the regular trading hours open in 9:30 Eastern time, we made a high here. We kind of sold off and we're looking at space, sold off, come back, we open the opening bell, price sells off, right? Boom, boom, make a new low. But then as we start to break out and we rally, look at this. We go right to the all-time highs, kind of look above and fail, okay? And then kind of go sideways. But the patterns I look for are patterns something like this, right? Where we're kind of in a downtrend, right? You want to see a downtrend. And then we start to make an uptrend, right? And then on a dip, if this is all we saw, I'd be looking at, we're making a high, a lower high, right? But then what happens is this pullback doesn't make a new low. We actually rally higher to the VWAP, right? This purple line's a VWAP. So now we're making higher lows and higher highs. The trend is reversed, right? So what I would be looking at is to take a long right above here at the 1884. And usually I'll have 1 or 2 pennies above. I'll just come over here, 1885 or 1886, we'll say, and I'll put an order in just like this, right? A stop market. With Thinkorswim, you could do stop limits. I'll do another video of how to set that up, which will be the video after this if it helps you guys how to set those up, because you cannot do a stop limit in the dome. You can only do it in the chart. So I'll do a video separately. My next video from this video will be all about that. So hopefully that helps you guys out, right? So what I'll do is put an order here, okay, And then what I'm looking for is that breakout. Okay, because if price breaks out above that, usually you're going to see a lot of shorts covering and longs getting longer. The reason being is because we're in a higher trend, upward trend, making higher highs and higher lows. So look at this. Here is where our entry would be. For me personally, a lot of my trades, I like to look for maybe 10 cents of a target. Maybe a nickel to 10 cents. That's to get in and out. I'm not looking for these big runners, things like that. It's just my trading personality. I know there's a lot of times where a lot of these stocks will move $2, $3, $4. But for me, it's get in the market, out as quick as possible with a profit. Because there are so many times where I've seen price go up, fill me, and then reverse and come right back down and would stop me out. So again, pick what game you want to play. It's all the one takeaway from this video would be what works best for you. What's your personality type? Are you okay waiting for a trade to play itself out? Because if you are, you're going to have more losers because you'll get stopped out more, but you'll also have these bigger runners. At the end of the day, I truly believe it all comes down to about 50-50. It doesn't matter what you do, but different personalities, scale in, scale out, you could do that. I just try and go all in at one price and try and pick up my dime. Nickel, dimes, it depends if price slows. Usually what I want to see is when price breaks out, okay, and we're going to see it right here. Boom, okay, it fills me. Normally what I would do is once I get the fill, I'll just start to watch my reverse waterfall price action, right? And I will just adjust my stop as it goes higher, right? So below the previous low candle, and look at that. Never even took heat, kind of bought, filled, went sideways for a second, and then boom, target hit. But I would have, once that candle opened right here, okay, I would have moved my stop all the way up. The low of this is 71, okay, that candle. So what I would do is I would just move my stop to 70. Now, if you want, and you want to let runners run, once this candle is done being formed, I would just move my stop 1 penny below that to 85, right? So if we came all the way up to 85, now it's almost a break-even trade. And look at this. You could keep getting runners, right? And that's a good way to trade. Just use pure price action to be able to look for that pattern, right? Because let's see what happens. This thing, your entry again was 86, ran all the way up to the 200, which was in 1915. So you're talking a 30-cent move. But then you would have been stopped out because you would have kept trailing your stop all the way up to about 1903. So that's one way you could trade this is a pattern, right? The other patterns that I like to look for are things like this, right? If we kind of make a high, have a hard sell-off, and we start to curl back up, okay, you can maybe look for from red to green, right? It poked its head just above and then failed. I would maybe look for a long right above this wick high and look at what happens, right? If let's just use this line, the high would be 35, so maybe I'd use a 36 entry. Boom, it fills you. You're already out your 10 cents right there. Okay, you only need a couple good trades like this because you could do 1,000 shares, 2,000, 3, whatever, and look for a 10 cent, make 50, 100, 2, 3, 400 bucks on a quick 10-cent move. Or you could maybe say, hey, let me buy 1,000 and scale out. Again, what do you want? But what happens if you're still in, it reverses and then stops you out at break even? You kind of didn't take anything. So again, there's no right or wrong way to do that. But I like patterns like this. I would be looking at a pattern like this: down, bounce, pull back, a lower high, right? And maybe look to get long above here, because we'll now reverse trend. We'll start making higher highs and higher lows again, right? But if I saw something like this, a pullback, I would then probably look to get long somewhere around here above this high by 1 or 2 cents, right? And I would look to go, hey, let me get long here, seeing that I might take this out. Well, over here, if I got long here, or I waited to get long here, I would come and look at the 5-minute chart, and I'd be like, okay, if we break above here, what happened here? Look at this: up real hard, down real hard, up real hard, down real hard. So if we broke out above here, I would probably say, hey, there might be some momentum to get us back to the high of day, and maybe I'll look for something like this. Maybe I'll buy, take some share, maybe sell 3/4 of my position, move my stop to break even, and then let the rest run to the high of day. But I very rarely do that, but that is something that you can do. Again, I like to just get in, take my money, but again, it's all about the patterns, okay? And if you know what patterns to look for, okay, then you could kind of be really successful and kind of have a very high probability. That's all this is. It's all about pattern recognition and understanding the patterns. Look at the daily. If we broke above this, right, these highs on the daily, well, there actually has room to run all the way up to these highs, right? So if we took out this high on the daily, okay, that's around $20. Well, dude, there's room to run all the way back up to that 21 and a half level if we were to take out these highs. So just things to look for, how to combine all this, and the patterns to look for. The other thing I would say is always use a stop loss. Again, I like to use previous candles low as my stop. So if I'm looking for this breakout and we break out on this candle, I will use a stop right 1 penny below that low. That is the one takeaway. I won't just say, oh, well, I'll hope and pray, anything like that. Because if we break out from here like this, and it just kind of goes here and then fails and takes out this low, chances are we're going lower, and I don't want to be in that trade because that's what would be called a look above and fail. So as always, I hope this video helps. Make sure you guys like, subscribe, and make sure you watch my next video. Is I'm going to show you how to set up trading directly from the chart using bracket orders. So until next time, we'll talk to you soon. Thank you.